So when money stops moving, there's no way to pay employees, which means people have less money to live off of. They stop paying their bills. That's how we go into a depression. Grubhub, DoorDash, all that stuff did really well. I think their market caps, damn near 20% went up, but
I never looked it up, but it'd be interesting to see.
yeah, we'll have to research that a little more. But they printed all this money so that people would then, it's like how the average American acts when they get their tax returns back every year. They take that money and then they go spend.
Mm-hmm.
So it's the same effect as they had this money that they weren't expecting and they spend it. That's how we keep money in circulation. The government or the Fed understands that the effect of this is now inflation is going to be very high. And when inflation is too high, how do they combat it? Well, that's monetary and fiscal policy, right? And so they raise interest rates because when interest rates go up, people stop spending money as quickly. And I think as of the last jobs report, they said inflation is still higher than they want it to be. So they keep saying, "Oh, we're going to lower rates. We're going to lower rates," and then
They'll
they say
keep pushing it off until
exactly
because they're not. I don't remember the exact numbers, but they weren't that far off though. I think they were like 0.5%, 0.75% higher than they wanted, from what I remember. But
right.
I didn't study the numbers. So you were talking about a candy bar and $1 and all that stuff, and this might have been from one of the classes I took, but the scenario, and I never really thought about it. So you go to the store and you get in your car, you drive to the store, you spend an hour shopping, you buy that candy, candy bar being one of the things you took you an hour to buy. You spend $1 on that candy bar and you come back home. And I show up at your house and I knock on the door and I'm like, hey, I'll buy that candy bar from you for $1. Would you sell that to me for $1, or is it worth more to you at that moment in time because the hour you spent, the gas money you spent, is it worth more to you? Or would you sell it to me for the same price that you had just bought it for?
Probably not. I mean, but that goes into what is money. Well, I mean, all that money is a bartering system.
It's a value, and that's what I was getting at. Like, when you buy or sell something, it's a value. What is it worth to you versus what is it worth to me? Mm-hmm. And it's not. There's no tangible thing. Like if I want to trade you a bucket of bananas for a candy bar, we can do the same thing.
Absolutely.
So it's really nothing. It's whatever is the value to you. So way back in the day, farmers and stuff, they had to mend their own clothes. They had to milk the cows. They had to grow the wheat. They had to do all this stuff. Well, then they realized, well, I'm good at planting corn. You're good at planting wheat. He's good at cattle. So why don't we just let him do all the cattle, he do all the wheat or whatever I said, and corn for me, and then we trade. Mm-hmm. And there was no money per se, but there was trade, and that's really all money is. You said something at the beginning, and I guess I would argue with you slightly on this. You said money isn't backed by anything. Mm. The thing that backs the American dollar is American military and American ingenuity, if you will. Like just our history. I say history, and we're only 250 years old, roughly. But
well, it used to be the world's currency.
Yeah, I mean, technically it still is, but they're trying to. There's
the yen, right? The yen's
well, there's still everything's traded on the dollar, but I can't remember. There's a handful of countries that basically have this other currency. I'll have to look it up and maybe talk about it another time. But they're moving, trying to push the dollar out. Which,
well, explain
America.
What does that mean? Especially from the global economic point of view of the dollar, the U.S. dollar being the world's currency. What does that even mean?
Well, I mean, as the world's currency, and everybody's trading on it, like you said, money has to move. So American dollars are flowing. It's not in America. Like when you buy something, you buy something on Amazon. Amazon buys it in China, Taiwan, India, whatever.
So they attach a value to what they're buying based on U.S. dollars.
Based on U.S. dollars. Well, we get the U.S. dollar isn't the world currency anymore. That means we have to buy into something else, to another currency, to trade on the world stage, and it will dramatically deflate the U.S. dollar. Not only is it going to deflate the U.S. dollar, but there's so much loans out, if you will. Like our debt is owned by other countries.
Mhm.
So China owning quite a bit, other countries owning some too, EU owns some, but it'll be real interesting.
Why can't we do the same thing with currency? My assumption is because other currencies fluctuate so much.